So the market is off and running, and we have a huge shakeup in the top 10 retail stocks that were bought by us. You know, the little guys, the retail investor, and some of our picks were great, and some of our picks were not so great at all, if I'm being honest. So let's discuss the good and the bad from a long-term buy and hold investor's perspective. No trading, none of the other games. We're not chasing short squeezes or any of that other trash like that. We're about good fundamental investing here. So let's take a peek. Let's see exactly how we did as a group together and kind of analyze each stock that we were buying. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. Now, as always, remember guys, this is not my list at all. This is not my top 10 stocks to buy. Every month I put out my list of stocks that I'm looking to buy at that particular time. So this is not my list at all. It's not Luke's top 10, not what Luke would buy the most, not my ranking, not anything else like that. It is strictly in mass what we bought, 1 through 10. The number 1 stock we bought the most, all the way down to the number 10 stock that we bought the most. And yeah, there's some surprises on this list. There's some of these stocks that I can't figure them out. And there's some great stocks on this list as well. Just keep in mind, it's not my list, but if you want to see my list of stocks that I'm looking to buy, complete with price targets and everything out, check out the pinned comment. I may have left something special down there for you guys, but we'll talk more about that at the end. Let's get into the top 10 stocks that we were buying. Starting off with number 10, and that one is Disney. It's actually a divisive stock for a variety of reasons there. None of the rabbit holes I'm going to run down today, guys, so please, I'm not going to engage in any of that sort of stuff. But from a business perspective, I actually own a little bit of it, bought it in the $70 range or so, because it's a turnaround play. And you're getting cheap enough to where the risk reward at the time was worth it. Obviously, it's run up big since then. So hopefully it isn't one of those things where we were buying because it's already had a big run, but we're buying because maybe you feel like Bob Iger and team over there can turn around the business. Obviously, that remains to be seen. It is a long way from being turned around. They're trying to. They've got a roadmap kind of laid out, but it's going to take time. And more importantly, a lot of time. Even for a lot of the complaints that we all have about Disney in general as a company, as a stock in particular, it's just going to take time to see those sort of things play out. So hopefully we aren't buying the FOMO there. We're just strictly buying the company because you feel like, hey, I understand the plan that's going on there. I believe in that turnaround. But keep in mind, it is a turnaround play. It may not go well, and you've got to understand that risk with this stock. So number 9 is Meta. Now this one, I'm honestly disappointed by, not because it's on the list, but because there are several other stocks that have no business being above this stock. And it's just one that just continues. It gets disrespected by Wall Street, and it looks like it's getting a little bit disrespected here by us as retail, especially with the market running so hot. There's not a lot of good valuation plays to buy into, but yet there's Meta trading at a very reasonable valuation, printing money like they normally do. Oh, and by the way, announcing a huge monetization opportunity that they just unleashed with WhatsApp. And, I know us here in the US, we don't necessarily understand that opportunity as well. The entire rest of the world uses WhatsApp with the exception of us here in the US. I understand some of us use it. I obviously have it as well, but I don't talk to my American friends using it. I talk to my international friends using that because that's what the whole rest of the world uses. That's why I have it there. So for me, great job by us picking it up. I just wish it was a lot higher on this list, especially given some of the stocks we're going to talk about coming up soon. Number 8 is Palantir. Now this one I'm proud of and I'm not proud of. This stock couldn't make the list for the life of it when it was at $6, $8, $10, $15, $20, $30, $35, $40, $50. It didn't really make the list until it was already well into its hype cycle. Then it started making the list, and it's staying on the list, more importantly, meaning we are buying at these all-time highs. You have to understand it. To me, it is a great company. It is absolutely going to be a huge future, great company in my portfolio. I don't know how else to say that other than I just believe in the future in Palantir. But I would be foolish to say they have not pulled forward some of those earnings into that future there. How many years? We'll have to wait and see. We'll see what they say on the next earnings call. But man, it has been red hot. And I love seeing it on the list. I just wish we would have seen it on the list a lot earlier. Hopefully this is not the retail crowd buying the stock because somebody's out there saying it's going to 400 by the end of the year or something crazy like that. That's somebody else sent me a video, somebody who was saying it was going to 10x in a year. Again, just silly stuff like that. If we're chasing that, man, we're going to be in for a world of hurt as retail investors. So although I'm glad to see it on the list, it is absolutely 100% not just stretch based upon valuation. It is really overvalued at this stage. And we'll have to see what Wall Street decides to do with it. Next up is GameStop. I don't know, guys. I can't get this one. I don't know why it stays so high outside of people believing in the Wall Street bets narrative. I know some of you guys occasionally comment on, hey, you believe the company's doing this. You believe the company's doing that. Hey, look at the cash. Look at this. Look at that. I'm sorry. The cash didn't come from earnings. It came from debt. That is not the same as stacking back profits quarter after quarter after quarter and basically putting that up into the balance sheet. There is totally, that's actually a red flag, not a good flag whenever you see that sort of stuff. Also look at earnings, look at the revenue going down, look at all the metrics moving in the wrong direction. Just simply highlighting these few shiny objects over here and then ignoring and negating all these things over here is absolutely how retail gets crushed over and over and over again. That's why I preach fundamentals so much on this channel. I'm sorry, I know somebody down in the comments is going to try to sell me on this being a great play and a great place to put your money, but it is just that there's nothing there that I can see that's going to happen. It's a dying business and a dying business model. And although they've done some maneuvering to absolutely shore up their balance sheet, I would agree there completely. It still was maneuvering to shore up a balance sheet, but it didn't come from increasing revenues and increasing profits. So that's obviously something you have to watch right there. And that to me is far more important than, well, they have this, well, they're thinking about doing that, well, they're getting into this or they're getting into that. That's great. The numbers are what they are. And at this stage, there isn't a whole lot going on there outside of the hype trade that's always been with this stock, which may very well work in your favor, especially in a bull market like this. But we don't play trading games here. We're long-term buy and hold investors. That kept us from buying the stock at those all-time highs and last year and the year after that, or the year before that. And that's been a great play all the way around. This stock has done nothing except for go down since that time frame. Pull it up and look, it's down on the 1 year chart. It's down on the year-to-date chart, even larger. I think, what is that? Yeah, 25% for the year, something of that nature. So no matter how you slice it, the stock is moving in the wrong direction. The earnings are moving in the wrong direction, more importantly. So it's one I'll stay far, far away from. Maybe there's a turnaround in play there. I'd love to hear the case for that down in the comments. But throwing out it's a great stock because, well, they got a lot of cash on the balance sheet, while ignoring exactly how that cash got on the balance sheet is just not being a prudent investor at all. That's where learning how to dive those financials and understanding financials on a high level is so important so you don't fall for narratives like that. So next up is Microsoft. So here's a business where the financials are moving in the right direction. Totally opposite of what we're seeing there with some of the previous stocks and some of the stocks we're going to see here shortly. But Microsoft is a great company. It is trading a little bit rich right now. And I really think the vast majority of the stock market is trading really rich right now. Not crazy, 2021 or anything else of that nature, but definitely riding on the high side there. So you got to be a little bit cautious in regards to valuation. But is Microsoft a great stock? Yes. Glad us as retail are buying it. Hopefully this is just part of folks' regular DCA into great companies. And that's exactly what we're seeing right there with Microsoft. So a great company. Great job by you guys keeping this on the list. But we're right back to our bad habits with number 5, and that is Ford. I don't know. Nobody has it. There's never an answer. It's always high up on this list. The only remotely reasonable explanation I've seen since the stock has been on this list is for the dividend, but there's 1,000 better dividend stocks than Ford out there. So again, I'm not sure what we're thinking as a retail crowd here. I really got to believe there's some sort of crazy trade or something else on, or some sort of working underneath, super short squeeze, mega gamma, whatever going on underneath, or somebody thinks is going to happen underneath with this stock. Otherwise, I can't make any sense of it, guys. I'm sorry. I do believe that the auto industry itself is probably, is going to be on more of the uptrend, especially as rates finally come back down again. So that way we can kind of get out of its kind of a cyclical, bear market, whatever the heck you want to call it there with autos in general. I would agree there completely. So if that's the play, okay, that could make some sense. Although I think there are just better plays with far more upside, far less albatrosses all over the financials than Ford. So I don't know, maybe somebody can explain it down in the comments. For me, it's one that I'm definitely staying far, far away from. I want companies that can continue to grow consistently into the future. Don't really have any interest in a dividend play that really doesn't have much of a future outside of a hype run of some sort. Just not really a stock I'm interested in. So number 4 is Amazon. Hey, love seeing this one where it's at. Great company. Still a little bit undervalued if you're asking myself in regards to valuation for Amazon stock. It's been a little bit of a tear here lately, but because the valuation got so cheap, there's still a lot of room to run in the stock. So I love seeing us piling into that stock. I don't think there's anybody who thinks 5 years from now, Amazon's going to be smaller than what it is right now. It is a great company. They have so many irons in the fire per se, that although, AWS is growing and ads is starting to really pick up and grow and all these other things are growing, they got all these other irons in the fire per se that start off with small and they won't really impact anything. And then before you know it, it'll be the future driver of revenue growth while all these businesses kind of, grow. And then they kind of hit kind of legacy status to where they just can't grow as high anymore because they're so large in general. And it just seems like Amazon continues to think about that future far more than trying to satisfy investors in the present. That's part of owning the stock. And so I'm glad that I'm seeing retail piling into this stock, especially when we're getting really great pricing on Amazon. Number 3 is Apple. You guys know it's my favorite, although I gotta be honest with you guys, I don't play favorites here. It's overvalued. But I understand why they're running there. Institutions are also running there as well, especially if you feel uncertainty, obviously with all the tariff noise and everything else going on right now, geopolitically and everything else. It's a safety stock in a lot of ways. And it's kind of a hybrid stock to me because you can still get some growth out of it, but it's absolutely, operates, and they move their financials and the way that they use their income. They definitely operate in a very safety-wise manner there. So for me, it makes total sense as to why you kind of end up with kind of a hybrid crowd, or both crowds really enjoying getting into the stock here. So although I think it's a little bit overvalued, hey, I really enjoy the stock, and I think long-term, you're going to be just fine owning Apple. So obviously, for me, it's a buy, but just not at these prices. It's just trading too rich for my blood, per se. Number 2 is Nvidia. Hey, this one makes perfect sense to me, too. Full disclosure, I don't own it. Just don't understand the chip sector, so I'm never going to own Nvidia, not because I don't think it's a great company. I can clearly see it's a great company, but one of the biggest mistakes that we all make as investors, and that I've made in the past, is just simply owning things that I don't understand on a high enough level. It creates mistakes. It makes it hard to see opportunity from a fundamental problem with a stock or with a business, and so that's why I've just learned the lesson the hard way over many, many years. Even whenever I make money on a stock. In some cases, the last time I did this, I actually made money on it, a really good chunk of change, 20-30% or so. However, I just didn't understand what I owned. So it was a very, very uncomfortable situation to be in. And for me, investing should be fun, easy. Stock market tanks, I don't want to have to think about anything because I understand things on a high level and I go, ooh, this is just opportunity. And for me, it's super exciting. There is no other emotion that comes into play unless I happen to own something that I don't really understand. Then I don't really know whether or not I'm getting a deal or not whenever I see a significant dip in that stock. I don't know if I'm getting a gift from Wall Street, or is there really a problem and I need to be concerned? You can't know that definitively if you don't understand the company or the business or the sector that they're in on a high level. That's why I only invest in what I have and what I understand, basically, my core competencies, or my circle of competence, as Warren Buffett would say. That's why I invest that way, because I've been in the other situation, and for me, it's not a good feeling. It makes investing stressful instead of fun, and I don't enjoy that. More importantly, I've made more money doing it the other way because I can make the best decisions possible. So for me, one I'm staying away from, but I can't say it's not a great company, not at a reasonable valuation, because it absolutely is. So I understand exactly why you guys are piling into it. And number 1 is Tesla. Hey guys, I don't know what to say here. It is a retail favorite. It's been a retail favorite. To me, it's trading extremely rich. It has been for a while. Tesla tends to do that, and then it goes on these epic downturns, upturns. Obviously, we've seen all the drama that's kind of kicked off over the past weekend, over the weekend into this week in regards to Tesla and Elon and everything else. And hey, guess what? It's Tesla. This is par for the course. This is nothing new, nothing different. You got to understand that when you own the stock, you also take on Elon, which is great. It means you get a lot of innovation. However, it also means you're going to get a lot of controversy, a lot of silliness, and a lot of this thing's going to add $1 trillion next year, and a lot of other talk like that where, he's just kind of talking off the cuff and very, very loose with a lot of sort of things like that. So you got to understand the journey and the roller coaster with Tesla. Nothing moves like Tesla. I've never experienced a large cap stock that moves like Tesla. So part of the journey. I absolutely understand why it's number 1, but I got to be honest with you guys, it's overvalued in my estimation. And if you want to see my complete watch list with price targets, all my buy and sell alerts in real time, be able to analyze and understand how to create a valuation and so much more, check out the pinned comment. I may have left something special for those of you guys that hung around this long, where you get all that, plus free courses, free coaching, be a part of the best 6, 7, and 8 figure Discord out there. There's so much involved in a membership. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.